that's the image that our company uses a lot. It's a bit of an aspirational image. Maybe you're all dreaming about heading off in the sailing boat. Just a little bit of an update on what's been happening in markets. Show you some performance chart of the key strategies and asset classes that we at Quilla look at when we're constructing portfolios. So that's been a real challenge when you construct portfolios, is how do we achieve a reasonable outcome when that's the environment we're playing in. Iron ore, traditionally being one of the mainstays of the Australian export economy, to produce a number close to zero indicates that their economy really is struggling. And their manufacturing PMI below 50 indicates that as well. For the best part of, the length of this chart, taking us right out to early 2024, that's an indication of a future recession. And that indicator by itself has got almost a perfect record of forecasting future recessions. Quick chart on valuations. With all those collapses and those falls that we talked about at the very start, you would think that perhaps valuations were looking quite cheap.
And the fund invests in some large companies. We have small holdings in Microsoft and Amazon, but it does invest in smaller companies, and our real niche is in and there's an increasing amount of evidence that points to it being conservative and some of the problems you're starting to see emerging around the world being a bit worse. The wind market's not growing as quickly, but is an area we're focused on the research side at the moment, and I expect we'll have some investments in that space in coming months. Just quickly on energy, I can come back to it if people are interested. Nuclear is a very prominent topic today. We're not invested within the fund. It started producing electric locomotives, and we think that's going to be a significant profit driver for the business as the rail industry goes through another cycle of investment. That's something that's become increasingly prominent to consumers recently, and is starting to be regulated more heavily. If you go into the supermarket now, it's a pretty boring, low-growth industry, pretty boring, low-growth company, generates excellent return on capital. Alternative protein is another area of interest to us, another good illustration of the way that we think about the world and how we invest. But the players in that space to us aren't particularly attractive as investments in the downstream end. But we do have exposure through the largest ingredients company in the world. So if you want to turn pea or soy protein into something that looks like